Skeptics would argue that Bitcoin is not the best store of value because its value is ever changing. Rightly so.
It depends on who you are asking. The fact of the matter is, Bitcoins and fellow cryptocurrencies' volatility can actually be its greatest strength or its worst enemy. I'll talk about volatility later in this video, but first let's talk about Bitcoin as a store of value. Yes or no? The argument that Bitcoin is an inferior store of value is likely to rankle certain parts of the community who insists that as a digital gold, store of value is Bitcoin's primary proposition. To be very fair, I'll put through a widely accepted definition of store of value that I quote from random Google search. Store of value for an asset such as money or gold that is purchased or accepted as payment for goods and services is its ability to purchase other assets in the future without rapidly losing its purchase power. Bitcoin as a store of value looks quite radiant to me, at least. It's a perfect contender to be considered as a store of value, not today maybe, but in the world we are entering into. Or let me rephrase it for you. Bitcoin is the perfect contender to be considered as store of value in the crypto economy we are entering. I personally and firmly believe that Bitcoin is the perfect contender, but not just being a store of value, but also perfect candidate for being approved as a digital gold by the authorities one day. If by far you are still interested in hearing my opinion, which I agree is quite controversial, defying all standards of traditional fintech world, which is pro Bitcoin, obviously, then please keep on watching. But before I get started, please hit that like button, turn on that little notification bell, and to help me reach more people and educate them on cryptocurrencies, please subscribe to our channel. So how is Bitcoin a store of value? If you are interested in Bitcoin and cryptocurrencies, even as a skeptic, you must have been hearing views such as Bitcoin is wildly violent and unstable, hence you simply can't trust it, or don't put your real money into it, or Bitcoin is evil. Opponents of Bitcoin would argue that traditional paper currencies like US dollars have provided reasonable stability, which Bitcoin fails to do, and so on and so forth. Obviously, all these views are from real people and their views cannot be just ignored or dismissed, yet they have missed one of the most important and obvious long-term patterns in the history of Bitcoin. It's true that Bitcoin is unstable, no doubt about it, in the short term, yes, but how about a long-term view? It's rock solid, in my opinion at least. If you don't believe me, then let's take a quick stroll down the memory lane. Bitcoin Pizza Day is celebrated every year on 22nd of May to show respect, the first time someone persuaded someone to take funny money, Bitcoin as we know today, for something which existed in real world, which is pizza. Back in 2010, a guy traded 10,000 Bitcoins for two large pizzas. At that time, the price for those 10,000 Bitcoins was roughly 40 or maybe 80 US dollars. Now, each year, someone writes a variation of the story. How much are those pieces worth now? A few years ago, those 10,000 Bitcoins were worth 7 million US dollars. In another decade, they might be worth 1 billion US dollars. So from say 80 US dollars to 200 to 7 million US dollars in just 7 years. What skeptics call instability. Again, it's your own perspective. You can call it instability. I would rather call it phenomenal growth. But again, I insist, it's how and what you want to see. Now let's see if Bitcoin or digital gold is comparable with traditional gold. Let me remind you, I'm not trying to weigh one more than another. I'm just putting forward a comparison. Whether this comparison makes sense or not, You are free to decide. So how could Bitcoin be even compared to gold? When it comes to better store of value, again, these are just my humble opinion, and I can be totally wrong. Only time can tell. When it comes to better store of value, Bitcoin is digital, gold is physical. Second, storing Bitcoin is extremely easy, whereas storing gold isn't as straightforward, neither safe. Third, many gold investors use third-party service providers, adding on to cost and risks. In addition, carrying gold along is quite inconvenient as it has some fixed allowance limits and also creates high possibilities of theft. Fourth, on the contrary, Bitcoin is stored in a digital wallet and has no physical space requirements. Digital wallets can easily be restored using a seed phrase in case they are no longer accessible. For example, in case you change your phone or your phone gets stolen. All you need to do is provide your seed phrase, your digital wallet, and your Bitcoins are safe. And how about the volatility of Bitcoin and other cryptocurrencies? Volatility is actually good, and I'll give you 4 reasons why. Reason number 1, in a capitalist market, companies are always experimenting with new approaches and new business strategies, and the free market decides which strategies are winners and which are losers. Similar to a traditional stock market, if a cryptocurrency market is steadily marching higher, no matter what projects are doing, it would be really hard to put your money to work. Although it may seem as if all ideas are genius ideas, a bit of market volatility can apply the type of pressure on the projects in working to trim the fat and stay focused on the best ideas. These best ideas are the ones that benefit the investors most in the long term. Number 2, periods of volatility give retail investors. In case you may not know, a retail investor is an individual investor who is a non-professional investor, buy and sell securities and funds. Getting back to our main point, volatility gives a retail investor a fighting chance against high-powered trading algorithms. Most of the high-frequency algorithms are tied to past market performance, and most are heavily influenced by the past 100 days of market activity. Human investors, however, have the potential to take a longer-term perspective. When it comes to the market, algorithms rely upon numbers, but long-term investors can recognize subtle shifts in market conditions. At the same time, human investors are also able to consider new and unique information that may not be incorporated into high-frequency algorithms. Number 3, one of the most consistent predictors of economic recession is patches of excessive price appreciation in financial markets, or I would say surreal price appreciation in financial markets. As an example, shooting prices in the housing market prior to the most recent US recession, these surreal prices tend to build up during periods that make investors to believe relatively low risk. Similar to stock market volatility, crypto market volatility is often a signal of a bursting bubble that we experienced back in the end of 2017. By early 2018, periods of volatility can also keep bubbles from forming in the first place. Investors may not like periods of volatility, derailing potential market booms, but you should understand this. Volatility also helps prevent the subsequent births of bubbles from being as destructive as they were back in 2017-2018. Number 4, for the past 10 years, new ideas in fintech or financial technology and money management have been introduced into an extremely friendly environment. As an example, our robo-advisors, these are prime examples of an investing trend that has largely gone untested so far. Since its conception, any investing strategy can make investors money. during a calm bull market. Similarly, within crypto and blockchain space, projects and their subsequent strategies that have produced high returns for investors are often exposed as one-dimensional during times of extreme volatility. But why? Because the strategies and the technologies that can handle the volatility stress test are validated and give investors even more confidence in the long-term project viability. If you like this video, please thumbs it up, share it, leave a comment, and of course, please subscribe. And of course, please follow us to help us grow. Thanks for watching, and I will see you in my next video.